We have seen huge percentage moves in both gold and silver in the first few weeks of the year, and huge percentage decreases in the last few days as well. They do not tie in with moves that we've seen in the rest of the markets. Liquidity is definitely very, very thin out there. That's exacerbating these moves. Hello and welcome to ATFX's gold and silver update. Volatility has been extreme. So what we're going to try and do today is try and put a little bit of sense about some of the moves that we've seen in the market. We have seen huge percentage moves in both gold and silver in the first few weeks of the year, and huge percentage decreases in the last few days as well. These are not usual conditions. These are very abnormal conditions. There's many commentaries out there trying to give reasons for these moves. They do not tie in with moves that we've seen in the rest of the market. So traditionally, obviously, we see gold move higher on safe haven buying, and silver joins it as well. Silver has obviously jumped on the bandwagon since last November. Now, we know we've seen huge demand out of certain central banks moving away from dollar assets, possibly moving into gold. We know we saw that through 2025. We've probably seen a bit of that through 2026. We know there's been huge retail demand for gold and for silver certainly out of the Far East as well. And that's one of the reasons, one of the unique things we've seen in these moves in the last few days and probably over the last few weeks as well, is a lot of those moves have been taking place in the Asian session. Normally we'd see big moves, not just in metals, but in FX and other financial products, normally during that London and New York session where you get the most liquidity. So a few things going on in the market that don't make sense to very old people like me that have been watching it for a long time. But one thing is certain, these are massive percentage moves. So individual traders do need to change their risk management and capital management strategies, because for instance, say we're used to seeing like $30, $40 in a day. We're seeing hundreds and sometimes thousands at the moment. It is massive moves. Liquidity is definitely very, very thin out there. You will see spreads moving out. You will certainly see depth of market moving out. That's exacerbating these moves. I'm talking from Wednesday lunchtime here in Sydney, so half into the Asian session, and the market is still thin. Liquidity is still thin. And we are still seeing these moves. So here we are. Here's the gold chart, just to give you a little inkling of what has gone on year to date. So here's 2026. This move to hit to the high, that's been a 29% increase in gold. Over the last few days, we've seen that's a 14% drop in gold. Another backed up by another 10% move. I think, sorry, this is the 14% drop in gold. That's after we hit the fresh all-time high. Look where that fresh all-time high is, just under 56,000. We're back at 5,000 now, but we dipped down to 4,400. It is crazy market moves. This move down here, 10% on the day from open to close, but the length of that bar is actually 14%. So we saw a 14% dip at the time. And then this is what we saw. We saw the recovery in trading yesterday. And this is live chart, obviously. And we're seeing it breaking higher again. This trend line, not really something we pay too much attention to. In these markets, the technicals aren't really having too much sway because the market's moving so hard. So huge moves in gold here. And as I said, we know that we've seen these kind of haven trades moving away from the dollar. Big portfolio diversification, that's taken us this way through 2025, and there were massive moves, but 2026 has been spectacular. As I said, 30% nearly in gold. A lot of people are calling for a correction. No one thought this correction was going to be as hard and as tough it is. And even now, I mean, even this bounce from here back up here, we're talking like 15%. They are huge moves, and we have to trade accordingly. No one really is putting together what's been going on. There has been talk of liquidation across certain markets, certainly leveraged markets were a lot of pain, with retail players coming in and buying. If they had leverage, they're having much bigger positions in the market. Maybe the pricing was probably too tight from various industries. Certainly we're hearing a lot of trading that's gone on in China, and some of those shops are not allowing people to withdraw their gold or their money. So lots going on around the world. That's true. The CFD industry as well. That's been going very well. I'm not hearing too many stories out there, but with these leverage products, it does allow people to take big positions in the market with smaller capital, and that's one of the advantages of the market, but also that can lead to why we're seeing some of these aggressive moves that's happened across the world. So that's what we've seen. We've seen massive moves up, massive moves down. We're now kind of like, if you look from the start of the year, we're sitting nicely higher, right? This is where certain banks, certainly the big banks, were calling their target for the year. We're back up there after a few weeks and then a couple of days from having dipped down nearly to the start of the year level. So all sorts going on at the moment. Trading techniques, very difficult to call it. It's not really moving on fundamentals. The market is moving on flow. So big flow comes through, it takes it higher. Someone wants to sell, big flow comes through, it takes it lower. And it is moving in tens of dollars and it's moving in percentages. So it is complicated to trade. Obviously, when you're seeing these kind of moves, a lot of people want to reduce their trade size to take their risk off a bit. But then you move out your trading parameters. So you're looking for more, but you need to have bigger stop losses as well. Highs and lows tend to work well in these markets. So probably not so much on the dailies, although they have been working. But if you're looking to be trading more actively, you're looking at the hourly charts or either short term, and they can go with these momentum flows, but you have to be able to react quickly and take some profit and take it off the table. So that's kind of where we're sitting at gold. We'll go and have a little look at silver at the moment. We're breaking up high. I mean, the only firm levels I would say that we've got now, as I said, these trend lines, not too good an indication. Most techs are not too good an indication at the moment. It really is highs and lows. As you can see today, we've broken through yesterday's highs and it's starting to make some ground. Next target will be the high up here that we got from, I think that's from Friday, high up at 54.50. And then, of course, this all-time high up just underneath $5,600. So in truth, no one really knows where it's going. Those big flows are going to dictate moves. It's very similar for silver, but as I'll take you over to the silver chart now and show you, it's even more exacerbated. So bear with me, I'll just get silver up. And so this is the silver chart. As you can see, very, very similar pattern to gold, but the numbers are much, much bigger. From the start of January, so down here we go, is the 2nd of January, we're trading at a low of 71.27. We moved up to a high of 121.64, representing a 70% increase in just the 4 weeks of January. Crazy moves. But then, of course, we've seen these harsh dips, 27% down from open to close. Over the course of the day, we actually saw it drop from high to low at 37%. Now, it was a little bit calmer, but as I said, massive percentage moves. On Monday, 6% down, it closed. But at one point, from peak to trough, that was an 18% move. And then we've seen the recovery yesterday, back up 7% on the day. Peak to trough, 11%. So massive moves. And once again, similar to what we've got in gold. And maybe you're thinking silver might have a bit of catch up to do with gold. It hasn't broken through yesterday's highs. There is a lot of different dynamics going on in the market. But could this be a resistance level? Probably, yeah. Whether it's going to make too much of a difference if big flows are going through, I'm not too sure. What we will be looking at in the silver market is those highs up at 118.44. And then, of course, that all-time high that I mentioned before, up at 121.60. On the downside, yes, there's a bit of a trend line. It's probably going to come in with this low at the moment. That's at 71.32. Plenty of opportunities out there. Pricing isn't actually too bad at the moment. In these circumstances, you normally expect your price to go massively out. Yes, they're wider than we normally experience. But as I said, we normally experience $30 to $40 days. Here, let's have a little look at that. Right, that's obviously the extreme case. What are we seeing? We're seeing $500. It's ridiculous. $50 days in silver. Sorry, I was talking about gold before there. But massive moves. Likely more to come. It will remain flow driven. Once it calms down, technicals will come back in. We'll start to see more moves from fundamentals. But keep in contact with us. You can subscribe in our channel as usual if you haven't subscribed already. Plenty of moves going through. It is dramatic to say the least. Good luck with your trading. If you need anything from us at ATFX, please let us know.